What if the best trade you make this year is the one you don't take? Most LEAPS investors spend all their time hunting for the next stock to buy. But after a strong rally, that's not the important question anymore. The important question is, how do you protect your gains and get ready for the next setup? Today, I'm walking you through my Q3 and Q4 playbook, how I think about earnings season, market volatility, and year-end positioning. This is the same framework I use on my own capital. I don't trade the news. I trade the reaction. And nowhere does that matter more than the next 6 months. Part 1. Respect earnings season. Here's a lesson that cost me money before it saved me money. Earnings are unpredictable. A company can beat earnings, raise guidance, announce great news, and still drop 10% the next day. Why? Because the market isn't grading the past. It's grading what comes next. This is why I sell most of my LEAPS before earnings. Not because I'm bearish, not because the company is bad, because I refuse to gamble extrinsic value on a single binary event. Run the Vegas check here. If you wouldn't put fresh money on this position the morning of the print, you shouldn't be holding it into the print either. My goal isn't home runs. My goal is surviving long enough to hit a lot of doubles. Part 2. July and August. Read the room. July is historically one of the stronger months of the year. August can hold up too, especially when earnings come in hot. But strength creates its own trap, elevated expectations. After earnings season, ask yourself, has the good news already been priced in? Am I being paid enough, in premium, in IV rank, to take more risk here? Would I open this position today at today's price? If the answer's no, that's not a hold. That's a trim. You never go broke taking profits. Say it again if you have to. Part 3. The September trap. September has historically been the weakest month for stocks. That doesn't guarantee a decline, but it does mean I get selective. Fast. In September, I raise more cash, cut position size, stop chasing momentum. Most investors think they need to trade every single week to be doing something. I think the opposite is true. Cash is not a failure. Cash is a position. It's future opportunity sitting in cash, waiting for IV rank to reset and a real setup to show up. This is the patience test. Anyone can hold a winner. Can you hold cash while everyone else is chasing? Part 4. Why October is my favorite month. Most investors dread October. I look forward to it. October is usually where fear peaks. Headlines turn negative. Analysts turn cautious. Retail panics. And quality names go on sale. This is when I start building my watch list, not blindly buying every red candle. Not every dip is a buying opportunity. But every great buying opportunity starts as a dip that scared everyone else off. I'm not trying to call the exact bottom. I'm running the A+ setup checklist. Is IV rank elevated? Is there real support underneath? And is the reaction to the news overdone relative to the fundamentals? If those line up, October stops being scary and starts being an entry. Part 5. November and December. Position for next year, not this one. This is where most investors get it backwards. People assume year-end means selling and de-risking. Historically, November and December are often among the strongest months of the year. Institutions reposition. Capital rotates into leadership names. Sentiment improves. So instead of asking, how did this year go? I start asking, what's going to matter next year? That means long-term themes. Artificial intelligence. Cloud infrastructure. Data centers. Software. Digital transformation. I'm not buying what's popular this week. I'm buying what still matters in 2 years, because that's the whole premise of a LEAPS position. You're not renting a stock for a quarter. You're buying time. Part 6. The rule underneath all of this. The biggest mistake investors make is believing they have to always be in a position. That's false. Full stop. Sometimes the smartest trade is take profits, raise cash. Wait. There will always be another earnings season, another pullback, another A+ setup. Your job isn't to catch every move. Your job is to protect capital and be ready when the odds actually favor you, not when your boredom does. We're not trying to win every trade. We're trying to make good decisions over and over for years. So heading into Q3 and Q4, respect earnings, protect profits, keep cash on the table, be patient in September, hunt for value in October, think long-term in November and December, and above all, you don't have to swing at every pitch. Save your capital for the fat pitches. If this framework helped you think about your own positioning, hit like, subscribe, and send it to another investor who's trying to build wealth through patience instead of noise. Thank you for watching, and I'll see you in the next video.